Okay, hello and welcome back to another installment of the video series on this channel called Please Fix Thanks. The point of this video series is I look at a trade that was taken by a day trader, or perhaps they're a trading influencer, somebody with lots of social media presence, hopefully, just to make it more interesting. Or I'll look at institutional trades. I've done hedge fund trades, I've done famous I think primarily hedge fund trades actually. So today we're doing somebody from the day trading space, actually somebody who I've done before. It's Dodgy, and I love Dodgy because he's so transparent. Dodgy trades primarily the NQ. So first of all, let's just watch his video.
Please send this to the haters who say never share losses. I took this trade. It was light bulb. Like, you guys know this is light bulb, and I just didn't go break even on it. Why, you may ask? I don't know. I had a conviction, and I knew there was equal highs above. Now, what was my mistake in this trade? How could I have prevented this? Well, one, I could have went break even, or two, I could have just never taken in the first place because we had trend line liquidity below, which means I'm longing with conflicting draw on liquidities. For anyone wondering, this was the trend line liquidity below, as you can see here. But yeah, was I mad about this loss? No. I would honestly take this any day of the week. You know, it's August, it's slow. I've been wrong about bias a decent amount all week. So did I manage my risk? Yes. Was I happy with this loss? Yes. And for the haters who say don't post on losses, this was it. So yeah. I ended up taking another little discretionary 15-second later, which got me back to a little red in the day. But I'm perfectly okay with that.
Okay, so now I'm going to try to break down this trade for you guys. It's kind of interesting. So the last time I did a Please Fix Thanks featuring Dodgy, I had actually journaled that day in NASDAQ, and just kind of like I'm not really primarily a NASDAQ trader, but I tried to, while the session's playing out, just make notes on my journal. And I actually had this in my journal again. So it was kind of lucky. Definitely made me want to make this video. So this was the 2023 model turtle soup that I saw that day in the NASDAQ. So basically, again, if you're on the 2-hour model, and again, like what Dodgy was saying is absolutely true. It's August. So, and honestly, the bias in NASDAQ is fairly bearish as well, which isn't usually what a lot of people who day trade NASDAQ are used to. They're used to just very much a default bullish bias. Probably Dodgy's much more flexible, but I know your typical NASDAQ day trader is more than likely to try to buy the dip type setups. Just counting these candles, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candles until peak manipulation. So that is just about as long as I prefer for a 2023 range model turtle soup to play out. I like to customize the time frame such that you have the following components. You have a 7 to 12 candle range, and ideally there's a pause CRT. This is why I stuck this one in my journal, to be honest, folks, is because this is a pause CRT right here of this 3 candle bullish. It's basically a 3 candle bullish kiss of death. And you get, I'm sure that there's probably an SMT with this little middle candle here dumping into the afternoon session on Thursday, the 20th, and then of course into the late afternoon and into the early Asian session and the midnight, and then early London and the NY AM and the pre-market. It's all just a pause CRT for many, many hours. And then we hit the peak manipulation right here, and this is in itself like a little baby CRT. And so we can go look on let's go look on FX replay, and I'll walk you through. So the setup before the setup, I already kind of explained it, but just to run you through again, what we get here. Oops, I'm sorry, it already played out. My bad. So these are the 2-hour candles again. it actually looks a slightly different on this chart than on my CFD that I was showing you, though it's the same sort of pattern. Um, this is this is a good origination candle for the run there, and then I'm sorry, it's got to be a swing. It's got to be kind of a swing high, doesn't it? So we'll call. It does look a lot different though. I think we'll call this one. This is an awkward looking candle. So one of the things I like about the origination candle, one of the ways I like to classify candles as origination candles is it's better if you're going bearish. It's better if it's a swing high, but if it's not a swing high, it's definitely like a super doji. In other words, the wicks of the candle are much, much longer than the body. And look at the symmetry of this. There's clearly liquidity above and there's clearly liquidity below this this candle. The liquidity below gets taken out pretty much right away here in the Thursday NYPM session. And then you get the pause CRT, just like we saw on the CFD screenshot on my PowerPoint. So basically what we're looking at here is this is the bearish turtle soup that pops off right before the open. And I use like the Romeo entry models, though, you know, since we're watching Dodgy, you could use an IFVG, you know, depending on the time frame to get yourself short here. It's that's the original bearish turtle soup down there, but this would actually be the range low that gets targeted. It doesn't actually get hit on the CFD. I don't think it gets hit on the futures either. I can talk about some of the dynamics behind this, but for now, let's just focus on the shorter time frame entry. So if you consider, well, so there's two different entry models you could use for this. You could focus on just this one little up close candle because this is the candle that broke the low. So in other words, or sorry, that broke the high of the range. So in other words, if you get a down close candle that closes below the low of that candle, and then you get price coming back up and retesting it, that is an entry model, right? That gets you in rather late, but that's okay. Not really that late though. You know, you'd be getting in right before the actual cash open, the NYSE open at 9:30 a.m. There's also so why are we on the 10-minute chart for one? Well, it's a 2-hour model. So basically a 2-hour model is, not 2-day model, 2-hour model. So a 2-hour model is going to kick itself off or be indicated by a 10-minute entry signal, and that's the pairing of analytical time frame to signaling time frame. 4-hour chart, you use the 15-minute. A 1-hour chart, you use the 5-minute. 2 hours is right in between those two. So 2 hours, you could basically use the 5 or the 10-minute. Actually, let's look in the 5-minute real quick. There might be a cleaner entry model on the 5-minute. Again, you guys know, if you guys have listened to my videos, I'm not really too into the actual entry models and getting those perfectly. That's a nice little 5-minute market structure shift right there. Though in right here as well. So let's actually use this. So if that candle is like the swing high candle, we get a really good dramatic close below this swing low. So the low, I'll mark it on. I'll use my marker here. The low that made the high. So this swing low makes this swing high, and then you take this candle. We close below that made that below the low that made that high. Then we dig up into that actual candle. You could use just the wick if you wanted to and treat it more like an order block, or you could use the entire candle from low to high. You know that we're back. So once we close below that, there's a really good tip off that we'll be back, because that's a bottomless candle, and the market loves to take the bottomless candles and dig back into them. So you know that you'll probably have a retest of that actual candle body at some point. So yeah, so that is that's the 5-minute entry. And you guys have already seen the distribution, but I'll go over the distribution in relation to the 2023 model. So basically, the 2023 model says that if you're between 7 and 12 candles on your particular time frame, here we have 12, then you should allow, or you should be, if you get a bearish turtle soup, you should be bearish for 3 candles. So we're looking at 6 hours of bearish distribution, and we accelerate so quickly to the downside that it's a little bit of a tip-off that one of 2 things could happen. Number one is we should be very bearish, and we should basically expect range expansion below here, but that's in the context of higher time frame. So in the context of higher time frame and time, it's actually Friday, right? This is the Friday session with liquidity ebbing very quickly on the weekend, and Europe is actually closing within this 6-hour period. So this 6-hour period includes the 11 a.m. Europe, basically the Europe close, the 12 a.m. Fixes on various products, the 10 a.m. options expiry, and this is the final, the daily options expiry for Euro options, and this is the final one of the week. In other words, there's really nothing to look forward to after that, and there's no major events planned in the afternoon, and so this being so bearish and engulfing, like literally, it goes probably to what, the 786. Oh, so this only has equilibrium, but it really does. It blows past the 618 with that one first distribution candle. To me, that's actually a sign that this thing is more likely to fail. Dodgy, let's look at Dodgy's entry really quick, since this is a please fix thanks video. This is where Dodgy went long. So Dodgy, he's an IFVG trader. This was, like he said in the video, this was his system to go long. When you get a signal like that, he called it a light bulb. We cleared the sell side liquidity there, and then we get an FEG below with equal lows above. That's like that's Dodgy's system in a nutshell. So Dodgy can take that loss. It's just one of those things. I say it a lot in these please fix videos. I think it's like the mantra of it is zoom out. So every time I have a big loss, it's because I got turtle souped. I noticed with Dodgy, his win rate is ridiculous. It's like 80+% win rate, and as a scalper, that is like amazing. But that 20%, it might be, some of them might be human error, some of them might be discretionary, but you gotta, at least part of it is a bias, kind of a misplaced bias, and that's cured by zooming out. So if you had zoomed out again to the 2-hour, it's just high enough time frame, it's just enough of a forest for the trees type of perspective to probably want to you probably want to be short into that open rather than going long just before the open or into the open. Let's just watch the rest of this thing play out. We owe it to that. And look at that. So this is why Romeo always says, take your partials and then get out at break even, because the market just snapped right back. This is probably going to be a target on Monday. So no matter how bearish you are, your biases for NASDAQ, make sure you respect the equal highs here, the sell side liquidity that needs to get taken out in advance of any further downward moves that you would want to predict. All right, guys, so that is the rest of the please fix thanks video. Thank you guys so much for watching. I'm hoping I had the sound on when Dodgy's video was playing.